In this video, we're going to show you everything you need to know about reading candlestick charts fast. Here's exactly what we'll be covering in this video. As always, if you want more videos more often, please hit the like button, as it allows for our team to keep producing videos on YouTube. Now, here's how you actually read a candlestick. Green candlesticks are bullish because price appreciated and went upwards for the time period. Red candlesticks are bearish because price depreciated and went downwards for the time period. This rectangle area is known as the candlestick body or the real body. These lines that stick out above and below the candlestick body are known as the wicks or shadows or tails. For green candlesticks, the opening price is at the bottom of the candlestick body, and then the close price is at the top of the candlestick body. For red candlesticks, the opening price is at the top of the candlestick body, and the closing price is at the bottom of the candlestick body. The wick ends at the top represent the highest price point of the time period. The wick ends at the bottom represent the lowest price point for the time period. Now, what does the size of the candlestick body tell you? The bigger the candlestick body represents momentum gain, as price traveled a greater distance during that time period. The smaller the candlestick body represents momentum loss, as price traveled a shorter distance during that time period. When you have a very small candlestick body or close to no body, this is known as a doji, which represents indecision from buyers and sellers because price swung up and swung down during that time, but then closed close to the same price as where it opened from, which means buyers and sellers got nowhere and again shows indecision. Now, before we show this on the charts, why are candlesticks important to understand? Candlesticks tell a story and are a reflection of what buyers and sellers are doing, meaning the candlestick pattern that forms at that particular moment in time tells you a lot about what is going on in terms of the buying and selling occurring in the market. So traders will look at candlestick patterns and the movement of candlesticks to make trading decisions, which is also known as price action. Now let's go through this right on the charts. This here is the asset you are looking at, and in this case, it is the Apple stock. This here is your time frame. Right now it shows 1D, which translates to the daily time frame, meaning every candlestick you see represents 1 day of time. If we were to switch this to the weekly time frame, it would show 1W, and then every candlestick you see on screen would represent 1 week of time. If we were to switch this to the 1 hour time frame, it would show 1H, and then every candlestick on screen would represent 1 hour of time. This bar below tells you the date and time. If you're looking for a reliable crypto platform to trade and invest in crypto coins, consider registering with one of the largest cryptocurrency exchange platforms, Bybit. Once you've created your account, navigate to the market overview on the homepage. Here, you can access the list of cryptocurrencies available on Bybit. If you click on Trade, a page opens that allows you to access the price chart and trading tools to analyze the current technical situation of the market. You can also place buy and sell orders directly from this page and search for any cryptocurrency you want from the top left corner. So if you'd like to receive a $30 bonus on your initial $100 deposit, simply sign up to Bybit through the link in the description. Now, when you see more red candles than green candles, this represents a downtrend and bearish price action and a depreciation of the asset, as sellers and bears continue to sell more of the asset, causing the push downwards. When you see more green candles than red candles, this represents an uptrend and bullish price action and an appreciation of the asset, as buyers and bulls continue to buy more of the asset, causing the push upwards. When you see a bunch of green candles together, one after the other, this shows price is gaining more upwards momentum. When you see a bunch of red candles together, one after the other, this shows price is gaining more downwards momentum. When you see a mix of both red and green candles together and sideways price movement, this shows indecision, consolidation, and a choppy market. So before we continue, please hit the like button, as it allows for our team to continue to produce free YouTube videos. So, how do you identify an uptrend? You have your runs here and your pullbacks here, which means an uptrend makes higher highs and higher lows. From a price action standpoint, a moving uptrend shows bullish momentum and that the buyers are in control, so you lean towards taking long entries to trade with the moving upwards herd momentum. So now, how do you identify a trend change from an uptrend to a downtrend? Type 1. You have your moving uptrend through the higher highs and higher lows before a lower low forms, signaling a trend change from an uptrend to a downtrend. Type 2. You have your moving uptrend through the higher highs and higher lows before you have a lower low form, followed by a lower high pullback before the full trend change breakout and lower low. Type 3. You have your uptrend through the higher highs and higher lows before you have a lower high that forms, signaling a trend change from an uptrend to a downtrend. So, how do you identify a downtrend? You have your runs here and your pullbacks here, which means a downtrend makes lower highs and lower lows. From a price action standpoint, a moving downtrend shows bearish momentum and that the sellers are in control. So you lean towards taking short entries to trade with the moving downwards herd momentum. So now, how do you identify a trend change from a downtrend to an uptrend? Type 1. You have your moving downtrend through the lower highs and lower lows before a higher high forms, signaling a trend change from a downtrend to an uptrend. Type 2. You have your moving downtrend through the lower highs and lower lows before you have a higher high form, followed by a higher low pullback before the full trend change breakout and higher high. Type 3. You have your moving downtrend through the lower highs and lower lows before you have a higher low that forms first, followed by a trend change breakout and higher high. So, how do you identify a sideways ranging market? Prices making same highs and same lows and moving in a sideways direction. In markets like this, look to take trades in both directions with confidence. So, how do you identify momentum gain? The first way to identify momentum gain is to look for tight price movement. In an uptrend, notice how prices vary tight together without wide swings, which shows buyers are in full control and that not enough sellers are in the market to cause swings in the opposite direction. You want to trade with this upwards gain of momentum and not against it. In the opposite direction, in a downtrend, notice again how price is very tight together without wide swings, which shows that sellers are in full control and that there are not enough buyers in the market to cause swings in the opposite direction. You want to trade with this downwards gain of momentum and not against it. So the second way to identify momentum gain is candles growing in size. In an uptrend, notice how each candle is getting larger and larger and moving a greater distance per candle, which shows a gain in bullish momentum. You want to trade with this gain of momentum and not against it. And in a downtrend, notice again how each candle is getting larger and larger and moving a greater distance per candle, which shows a gain in bearish momentum. You want to trade with this gain of bearish momentum and not against it. So how do you identify momentum loss? The first way to identify momentum loss is to look for wide swings of price after tight price movement. So this uptrend here is tight price movement, which means the buyers are in full control. You then had wide swings occurring, which shows momentum loss and that the buyers are no longer in complete control and can lead to a possible reversal of price if paired with trend change price action. Going in the opposite direction, this downtrend here is tight price movement, which means the sellers are in full control. You then had wide swings occurring, which shows momentum loss and that the sellers are no longer in complete control and can lead to a possible reversal of price if paired with trend change price action. The second way to identify momentum loss is to look for shrinking candles. In a downtrend, notice how you start with a big red candle and then every candle after gets smaller and smaller, which shows a loss of downwards momentum as the distance traveled per candle is less and less. This can lead to a possible reversal of price. In an uptrend, notice how you start with a big green candle and then every candle after gets smaller and smaller, which shows a loss of upwards momentum as the distance traveled per candle is less and less. This can lead to a possible reversal of price. The third way to identify momentum loss is to look for a candle color change after you have consecutive candles of the same color. In a downtrend, notice how you have all red candles before a green candle appears. This shows momentum loss because price failed to produce another candle with a lower low closing price and instead made a higher closing price through the green candle. This can lead to a possible reversal of price. In an uptrend, notice how you have all green candles before a red candle appears. This shows momentum loss because price failed to produce another candle with a higher high closing price and instead made a lower closing price through the red candle. This can lead to a possible reversal of price. Make sure to hit the like button on this video as it allows for our team to continue to produce more free videos on YouTube.